there's a lot of power behind financial data. Every time we move money from point A to point B, we also move information. When you pay for your bills, or when you go to a coffee shop, when you go to buy groceries, all of that gives a lot of context about you as a consumer, who you are, where you live, how much you're making, how do you spend your money, your preferences, and so on. And at the same time, if you're a business on the other end receiving those funds, it gives a full context about the business as well. But for many reasons, due to legacy technology and many players, this data, the payment data or information is fragmented and siloed. So we decided that if we standardize it, unify it, and make it understandable, then we can unlock a lot of products that were impossible or very smart before. Some lending to better payment authorization, um, accounting, automation, bookkeeping. And yeah, what we do is we take that financial data and make it usable and understandable at scale. And in the background, we have models that are essentially machines that take this traces of information and connect them together and then attach context. So we solve that problem.
It's a pleasure having you in the show. Thank you.
Thanks for having me. It's so nice to chat finally.
Definitely. So let's get into it. This podcast is about how we can build more purpose driven fintechs. So, what's your take?
I think the whole idea of fintech does have the idea of purpose ingrained in it somewhat, because fintech means financial technology to improve financial services, or technology that drives financial services. And financial services are at the core of people's lives. We think about social mobility and helping people improve their lives. It's at the core of that too. Per se, talking about more efficiency, we're talking about better lives for people. And there is purpose in there too. However, obviously, there's the capitalist and profit side of fintech as well. And fintech businesses need to make money. And sometimes it's hard to match that with purpose. It's hard to make profitable businesses that will be also purpose driven. I think we saw that especially as in the United States, this cycle, the rates went up, and a lot of businesses that were trying to create better products and services and serve the underserved and have that purpose in them have been struggling a lot and have had to make difficult choices. Yeah, I would say we're definitely trying. It's not straightforward, but the purpose is ingraining. We have better technology and more efficiency. Eventually, the greater purpose of fintech will be reached, will create better, more equitable financial lives and opportunity.
Yes. And I love that I think you're one of the few that touches social mobility, one. And then two, hey, it's not only purpose, but it's the struggle between being commercially successful and having customer outcomes. What do you think it's how? Like, how do we do that? How do we do both customer outcomes and commercial impact?
I think there's a few companies out there that are massive success stories that are proving that it's possible. What's important here is a lot of financial services are commodities and pretty low margin businesses, whether it's moving money, lending, opening bank accounts, all of the different services that we offer, they are largely commoditized. And unless you're a bank that has a massive balance sheet, it's really hard to make money off of them. So if you enter the business with that understanding, then you have to have a really valuable angle where you think, okay, you're going to take a commodity, deliver it in a better, more efficient way, hence create a better outcome. If you don't have that angle, again, you're going to struggle. And eventually, if a company is struggling financially, they start doing things that they weren't set to do, like charging fees to customers that they said they would never charge, and introducing more interest, etc., and so on and so forth. We've seen this the whole time. So I think having a very strong understanding of the business you're entering and the economics of it before you even get to do that, and understanding of your customers definitely helps, because as kind as it is, if you are advertising to underserved people who really need money, and you deliver that money to them, and then you have to recover that somehow. And you are going to charge late fees, and eventually you're no different than a loan shark. And you just have a nice website, and maybe you're funded by VCs. You're a startup, and you have a shiny logo and all. But the essence is no different. Yeah, I think deep dive into the economics, understanding your customer, and if you have that angle, so that you say, okay, this bank cannot serve them in a profitable way, but I can, then it's worth entering. Because believe it or not, most banks are not evil. They're just very rational. If a certain group is underserved, there's a reason for that. Unless you know how to reverse that, I wouldn't even try, because you're just going to end up in the same place, even worse. And there's a lot of companies that are doing worse by their customers than the bigger banks.
Yes, and that's a very good point because it's the power of data when analyzing like your customers and then basically deciding what's the business model behind it.
Yeah.
Can you then tell us a little bit more about Ntropy? What's your purpose?
Yes, and so we started the company with this very simple idea that there's a lot of power behind financial data. Every time we move money from point A to point B, we also move information. When you pay for your bills, or when you go to a coffee shop, when you go to buy groceries, pay for services, etc., all of that gives a lot of context about you as a consumer, who you are, where you live, how much you're making, how do you spend your money, your preferences, and so on. And at the same time, if you're a business on the other end receiving those funds, it gives a full context about the business as well. But for many reasons, due to legacy technology and many players, this data, the payment data or information is fragmented and siloed. So we decided that if we standardize it, unify it, and make it understandable, take it out of the silos, make it standard and understandable, then we can unlock a lot of products that were impossible or very hard before. Some lending to better payment authorization, um, accounting, automation, bookkeeping, so many things along someone's personal financial journey, as well as along like a company's personal journey. Yeah, what we do is we take bad financial data and make it usable and understandable at scale. In the background, we have models that are essentially machines that take this traces of information and connect them together and then attach context. I don't know if you've looked at your bank statements recently, but 90% of the time it's very hard to recognize even your own purchases. So now if just because of the way the information is written there, you have a bunch of letters, numbers, the merchants are not in a very clear form. They all look very different. If you're a bank who's trying to get billions and billions of these, it's even harder, obviously. So we solved that problem. Then further up the stack, many companies, including fintechs, use us to deliver better financial products and deliver more equity and better experiences to end consumers. So
And this is a huge problem statement. What made you think, as a founder, what made you think that you could win? What was your hypothesis when you get started?
I think you have to be naive, and that's been stated by many, but I feel like the more you think you can do something. So we thought, oh, this is possible on the technical level because now we have the algorithm. So why not? We can do that. As we started to dig into it, we realized why it's been so hard. Obviously, you understand why it wasn't done before. And there are many reasons, but I think timing is really important. There's two things that happened in the last 5 years that make this possible that would have been possible 5, 6 years ago. One of those things is financial data has become accessible. Even let's take 10 years back, if you wanted to share all of your financial history with another company or a bank or your insurer, or just take it out to take a look at it, it would be very hard. And every single piece of it would be locked in within your bank. And if you use a couple of cards, etc., it's just very hard to aggregate it and understand what's going on, let alone sharing it with someone else. Today, that's possible thanks to In Europe, there's open banking, obviously. There's a lot of it happening in Latin America as well and other parts of the world. In the US, there are private companies who have built pipes to this data and are making it accessible via the banks. Data access connectivity has been largely solved. And that makes it possible because if you can't get the data out, no matter how good your systems are, you just cannot analyze or do anything with the data. And the second thing is financial transactions are like text, long form and short form text. Um, until very recently, we didn't really have any technology that could accurately enough ingest this information and understand. It was impossible. You needed humans, and there's not enough humans in the world that you could pay enough to do it manually because the technology wasn't. It was pretty much impossible to do. You could get to 60, maybe 50, 60% of the time to the right answer. The rest of the time, and it would be wrong. So this human level understanding at scale was not there. Now it is thanks to language models. Since Transformers, it's been possible. And especially the last few years, larger language models completely unlock that. So you can analyze billions and billions of transactions at a fraction at the cost of a human, but with a similar level of accuracy. So those two things made it possible, actually. It's pretty much, a big timing opportunity, timing driven opportunity. And obviously with that, we have the right insight and we build the team around it to go after it.
Yeah, it's like a huge, exactly. Like you say, timing and opportunity. So, can you expand on who are your customers as such and which pain points are you helping solve?
And yes, we work with a broad range of fintechs and banks, also issuers, card companies, and anyone between Visa, Mastercard, the network, to the bigger banks, to the small neobanks and fintechs or personal finance management apps. It's a pretty broad range. Our end customer is a developer at a financial services company who's building a product with this data. And the main pain point is whatever they want to do, let's say they want to improve, they want to underwrite 5% more people because they want to give more loans to those who otherwise cannot get loans. They want to say more yeses. The first step that needs to happen is they need to look at the data and see if they can take the risk or not. If the data is in a bad state, it takes a lot of manual effort and it's very hard to do. Sometimes impossible. We take that pain away. They don't have to focus on the data quality side of things at all. They send us the data, we make it better, send it back to them, and now they can suddenly underwrite 5% more people than they could before, which unlocks revenue opportunity for them, but also a big opportunity for people who are borrowing. That's one angle. We have many people building subscription management tools and top of the data. Let's say you're a product manager who's trying to help you cut your costs and not pay for unnecessary subscriptions and automatically cancel them. They would come to us. We would show all the recurring transactions that are happening, like subscriptions, and then they would use that information automatically to go cancel for you. For banks, actually, subscription management has proven to be a really good tool because it incentivizes people to bring all of their information in one place, and then they can offer them a better product, cross-sell, just make sure they have a much better experience than they had before. Yeah, I think it's very broad. Recently, we've seen people trying to automate taxes and filing taxes, especially in the US. It's pretty odd that you have to file your own taxes and actually you have to pay for that as well for the software to do that. And banks are embedding this inside their applications because it makes a lot of sense. Also, for a lot of people, tax refunds are like literally the biggest paycheck they get or one of the biggest paychecks they get for the year. To do it right matters. But obviously you need to analyze a lot of transactions and understand where they belong, categorize them to be able to file the taxes. Again, that's like a crucial part. What we do is a crucial part of that journey to be able to make it happen.
you use multiple examples, like multiple use cases. And I want to go deeper, maybe not in all of them, but like in one or two of them. So for lending, like when we first spoke, basically you were talking about, hey, we can scale underwriting without adding more risk. Can you tell us a little bit more about that? Because that's a pain point that all lending teams have, right? Like we want to give more, but without the risk.
Um, yes, and there's always customers that are going to be risky per se, no matter how much information you have on. But usually a lot of the risk comes from not having information at all. So not having good data means somebody's risk. An example is you can be an entrepreneur, very well established, have solid earnings for years, move to a different country. And then suddenly this country, there's no information on you. There are data gaps and you are perceived as very risky. And so you can't do many things. It's very hard to rent an apartment. It's even hard to get a phone number. You cannot, yeah, you cannot get a credit card with a good limit and so many things. Although you are a good consumer and the bank should be happy to have you, there's just a data gap. And in this scenario, if you give access to better data, and let's say you can automatically analyze all of their outgoings and incomings for the last year, you can remove that risk significantly because suddenly you have information that you can rely on to make these decisions. That's on the consumer end. On the business end, small businesses are so different from one another. They're not like consumers, actually, their behaviors are a lot more similar. So you can group them together and make decisions. Small businesses are not. And a lot of banks don't lend to small businesses just because it's not profitable. It takes so much time to understand a small business. They're risky. It's not worth for me to spend this amount of time, money, and operational expenses to give you a $50,000 loan because I'm not going to make enough to recuperate my expenses with the humans that were looking through your data. If you can do that automatically, so you don't need as many humans, if you can suddenly underwrite thousands of $50,000 loans, they become profitable. And this is a huge deal for the SMBs because they can access capital where otherwise they were being too risky or they could. I actually am way more, I would say, passionate about SMB lending than even consumer because I think if you think about social mobility, small, medium businesses probably at the core of true social mobility. Unfortunately, with consumers, when you're lending somebody money, you don't know where that's going. If they're living from paycheck to paycheck and they get $500 here or $1,000 there to cover certain things, and then next month it's the same, it's very hard to get out of it, no matter if you charge fees or not. There's just not enough there. And with SMBs, you're just giving capital that's being used to create opportunity, to create jobs. So that's one of the best ways to, um, yeah, to drive social mobility and equity. So I think being able to support SMB lending at good terms and do more of it is really important.
Yes. Just like before I go into the next one, the next use case, I genuinely do love how you talk about social mobility. Lately, what I've been thinking about often is, hey, we have all these fintechs, we've had all this impact, we create all these tools, and as much as you help me save, it's not going to drastically change my life. Today in the news, there was like an article in the UK, money management solutions help customers save. And it was like in the billions of pounds aggregated. But when you put it on a like individual level, it was like £445 per year. That is £37 per month. And I was like, yes, it's amazing. It's amazing all the work that we're doing. But £500 a year in the UK, in the context of the UK, £500 a year is not going to change our lives.
It's nothing. Yeah. I think it's just this, no matter how good you are at it, that's a privileged view of the world when you think that people don't have enough money because they don't know how to save or they're educated about money or all these things. They don't have the tools or etc. That is simply not true. Yes, education is important. People could do better. Everybody probably could do better. But people don't have money because they start from not having money, and then it's very hard to make enough money. If the pot is not big enough from the beginning, no matter how much you move things around, it's still the same pot you're looking at. So it's really hard to make a difference. And I think it's similar to the way we judge, for example, obese people, right? A lot of the time you look at an obese person and societally we deem them as lazy. They don't know what they're doing. They should go for a run. But if you look at statistics, you see obese people in places where there's either food deserts or poverty, and they have access to bad food that's full of processed stuff, sugar that spikes insulin, creates issues, etc. And it's very similar. I think so. Driving social mobility, that's why it's hard. I think we've seen even with micro lending in Africa and India, if you look at the results throughout, decades, the difference it's made is tiny or very small, unless again, it's focused on businesses. Empowering people to start more businesses. That's one. And two, obviously making capital available to grow those businesses. That's really important because that's the only way we know in capitalism how to go from point A to point B and create fortune. And also you take many, so it's one to many. If you support one small business, you create jobs for many more people. It's compounds. So I think, that's very important. No matter how much you help people save, they're not making it up. It's hard.
Yes, I think that needs to be a shift in the industry as we started as we help people manage their money better, have less financial stress. Probably the future is we help people create income, e.g.,
Yes,
the how you
yes,
create income
yes,
is build a business, as small as
yes.
it may be,
How
but
do you
it's
use skill sets to earn more? How do you? There's so many angles to it that need to be there.
exactly.
I had it's so funny. I had this very interesting conversation with a cab driver in New York City, and he was telling me how in a couple of years he's worried that his job will be taken away by Elon Musk, who's going to bring robo
Mhm.
taxis on the streets. And I asked him how many hours he works per day. Crazy. He works 12 to 13 hours almost every single day, just one day rest. So 6 days a week, a lot. And he was pretty happy with his earnings. He did make enough money, to support his family, but it's a lot of work. And it's very physical as well. So I asked him, what if you worked half but earned the same amount? Maybe that's what the robo taxis would allow you to do. Maybe it's not that in his head, and maybe he has a point. He did not imagine a world or America where he would not work or get out of the house and anybody would pay for it. So he didn't imagine a scenario where he didn't have to do so many hours and earn. He just thought it's impossible. He said, yeah, no, they're just going to cut my earnings at all for whatever. It's never going to. I think that's, yeah, it's very sad because a lot of people, very hardworking people, are used to earn money with their time. And there's only finite amount of hours in a day, and it's very brutal. And there's finite amount of money you can earn per hour, and also make it profitable for the businesses behind. So the more we can move away from that, and hopefully automation will help, the better, right?
Yeah,
Yeah, if a company can make 10 times more from you per hour, maybe you can make at least half of that. It will be a win deal for everyone.
definitely. Yeah. And unfortunately, I think it's 99% of the population is on the treadmill of trading time for money. So that's it.
It's impossible. Yeah, it's very hard to get out of. It's very hard, and it is hard. Yeah, it's hard work. They're working crazy hours to do the med. Yeah,
Yeah. Okay. Coming back to data, because data is part of the solution, right? Like it's
yeah,
part of the how we empower everyone. one of your use cases is recurring spend. So and probably here the customers are, your users are banks, neobanks, all the money management
Yeah.
tools. We are always trying to be like, oh, this is basically recurrent spend, but we want to do it without the customer telling us basically that it's recurrent spend. You not only manage to identify it, but you identify it even if it's not on the same date every month or if the amount changes month and month. That is quite cool. Can you
Yeah,
tell us
yeah,
more?
yeah. We can predict if the prices go up or down. Usually they go up, so tell you that you can notify that maybe you want to cancel because Netflix has upped the fees, or Spotify or whatever else you're paying for. But also detecting things like utilities. Sometimes they're not paid on the same day, or there can be many other forms of recurring, spend that is not that evident. I think having a good picture of the committed spend that's going out of your account every month really helps banks to understand you and give you better choices, but also for yourself to understand your own finances better, because what's committed and what is the amount that you can actually be creative with and or save. I would say the reason this product is so attractive for the banks and fintechs is not just that they want better customer experience and NPS, but it's the one way to incentivize you to share all of your data uh, with all of your banks, with your current. So whoever offers that to you, they get to see everything that's happening across their wallets, not just what they have, which is like a holy grail. And before, if you had a Chase account, a Capital One account, and something else, they would only Chase would see Chase, Capital One would see Capital One. But now, if you suddenly click that magic link to show all of your recurring spend, you're going to share all of that information with them. And for them, it's a good opportunity because suddenly they can see, oh, maybe you have a mortgage with Bank of America. They can offer you a better rate and they can bring you to Chase, and they will consolidate or offer you a new product. They can see that you're spending on children's nappies and diapers. So maybe you're a new parent and they can offer, or a college account, or all of these different perks and stuff that they have for you. So it's that context that is very attractive to them across your spend. That's why they also introduce those products. And obviously it's for customers. It's great.
Yes. Just if I put myself in the shoes of the product manager in the bank, as you were talking, I was like, yes, I want to know that this person is buying nappies and this and the other. And then in the back of my head, it was like, oh my God, but it's so hard to do that with the resource that we have in the bank. And then I need to get in the queue, and basically it will be hard for my data team to give me all these insights. That's where you come in. How do you help PMs then, let's say product teams, get that information?
So we basically create this view automatically from like just the raw data stream that they have, so they can see it in their dashboards, etc., and make decisions based on that. But I think as we're moving and with technology and automation, uh, it goes further. So if right now we have humans looking at this data and then offering you some outcomes, we'll take another loan here, or we'll give you a better rate, or etc. Um, Increasingly, it's going to be another algorithm for you. So instead of the human sitting in the middle pushing those decisions, you will have an API that takes raw data, makes it cleaner, better, sends it to another API that then drives all these lending offers, etc., to you, and then that sends to you by the app, and then you accept it. So the whole journey is getting more and more automated. I'm sure you've heard it's because of the craziness with AI. People talk a lot about agents, or that's the new cool world that people use. But an agent
What's the word?
is agents, AI agent.
Agents.
So
Yes,
like
AI
if
agent. Yes.
you had, for example, before you would say, we make lending faster and better, like the new fintechs, that's what they were. And now it's an AI agent for lending. Before you would say we make compliance, we build software for compliance. Now it's an AI agent for compliance. The reality is it's the same software. It's not that different, except a lot of previous generation software. So like even fintechs like 4 or 5 years ago was more APIs data, humans, and then APIs data. So there were more humans in between. Now you're getting end-to-end workflows that can be completely humanless, that can drive outcomes, which is super interesting. And so an agent is essentially software that can do many steps of reasoning and then actions versus just, one point solution. So it's an interesting time. We still have to see how this plays out, but we're definitely going one step further on that automation curve, or maybe a
Yeah.
few steps further.
Yeah. And I guess now that you mention AI, there's, like you say, two steps. One is automation that you're on it. The other one is Gen AI, e.g., using all these models to enrich the data even more and create something new. Are you currently using Gen AI, or are you on the way of using on top
Yeah,
of
so
all the billions of transactions that we have from the banks?
so like in terms of terms, it's taken on and it's probably going to stay for a while. I really dislike the word Gen AI because the reason people use it is this generation of AI is different from previous because it's very good at creating and generating, right? Suddenly we have computers that can speak back to us and it's very persuasive and looks like human generated text or image. But like you said, those models are not only generative, they have a lot of great other capabilities. And one of those capabilities is the ability to parse and understand large amounts of unstructured text. And previous generation models couldn't do that. You needed to have structured data for them to be able to do anything with it. Here, you can give it all the unstructured text in the world and suddenly make sense of it. So for us, when I said the second timing thing that happened, we've been using transformers, which are language models. This is Gen AI since day one, in 2021, except these were smaller transformers. So our first model was a 50 million parameter model. So it's like a tiny, if you think about the model that powers ChatGPT, which was like the big breakthrough, it's like a tiny version of that. It's a transformer that's specially trained then on financial data to only understand finance and it's very small, but the mechanics of it is very similar. As these models have evolved, we've started using bigger models just because they're. So we're definitely on that curve. We moved from tiny mouse models to actually leveraging the massive trillion parameter models just because they're so much better and more performant. And what we do on our end, we make them cheaper and faster to be able to deliver viable results to our end customers. Yeah, definitely. And it's going to make a big difference as much as I think there's been a lot of articles recently in the press about Gen AI is affected or the economic impact is not there. And it's funny because if you look at the history of technology, it's been said about every single wave, whether it's the cloud or the car or anything important. It takes time for economic impact and for adoption. And I don't know why we're expecting enterprises to have less than 22 month cycles to see impact of something new, but it's definitely happening. So
Yes. What are the challenges that you are seeing in this space as a tech company, PMs, tech teams? Now that we have AI as a concept that it's more common.
I think for the first time ever, we've always had technology is a space that always moves very quickly. So I think people have been adapting to it for a while, but we've never had to build with tools that change this. It's been, and that's very interesting and super exciting, but also something you need to adapt to because a lot of the things that you're building around them also need to change then, which means you're in continuous. If you're a PM using a model, then there's the next model that's cheaper, faster, and better, and has a different output. Or you do this guardrails to do a certain thing, and you have a whole thing built around it, and then something new comes out that suddenly solves all of it anyway and destroys the value that you've created, and you have to go from scratch. But on the one hand, it's fantastic because as a company, you're leveraging this intelligence and it's constantly getting better, which means your products are getting. But building with it is not straightforward because you have this moving ground that you have to adapt to the whole time. So I think that's a fun moment for sure. And it's happened to us so many times, different things that we've done, etc., to go around limitations of models or certain things and build with one thing and then something else comes out and we're like, oh, wow, have to go in
Yeah.
and you build mechanisms to navigate it.
Yeah, because then as a takeaway, I'm like, hey, we need to start thinking the model that we're using may change very fast. So therefore, we need to build taking that into account. And then two, the productivity, efficiency, our ways of working. If agile was a thing and speed is a thing now, if things are changing so fast, then it's very important.
Exactly. I don't know what the new agile is going to be fair, but I think we're definitely software development is going to insane. Like I think out of every area, software development is changing the most. It's incredible. People, if you've written code even 10 months ago and 12 months ago and you're writing it now with the current tools, it's very different. And it's constantly improving. And there's so many new frameworks that are being introduced and so on. If at the core of a lot of these processes is software development, like agile, etc. And now with all of the new productivity unlocks and different things you can do, yes, I think those frameworks have to bend to that as well at some point. And yeah, but it's exciting. It's very exciting. And some things do feel, we get used to things very quickly, and things that used to feel magical don't feel magical anymore. And then we want something more, but it's fascinating. A couple of days ago, I think I was doing a personal website and I use Anthropic's Claude personally a lot at the workstation. And I just created a screenshot of a website from Dribble that I liked. And I said, oh, I'm just going to use this design. And then asked it to write the whole front end of it. Very similar to what I was looking for. I just gave it the copy and even it edited the copy as well. And then I had the full website. And as I was seeing the code appear on the screen, you have to sit back and realize it's like a magical moment. You just have a whole thing being done for you. But yeah, we've moved from Squarespace. I remember when it just came out, or Wix.com, where you had all these templates, and suddenly, even if you didn't write code, you could, use them. And now, milliseconds, code gets written for you and you said something in English, right? English is now becoming a programming language, I think. Yeah, I think Andre Karpati said famously, but that's like fascinating. Yeah, it's fun. It's definitely fun.
Yes. It's been such an amazing conversation. And we covered so many topics. Just to close the conversation, and I love asking this to everyone. If you were to change one thing in fintech, only one, that can make the life of customers, employees, and investors, customers, employees, and shareholders better, what could that be?
I would want everyone in fintech, when they start building, it's going to sound very boring, but you learn this as you build. I would want people to be way more focused on unit economics when they're building businesses, because if you understand your unit economics, you avoid a lot of mistakes that then trickle down to your shareholders and customers, etc. That's key. So that's, I think, one angle. Having a very clear understanding of that and then driving with that is important. And probably like a second thing is seeing from this cycle, compliance is hard and expensive, but it really matters. You cannot cut corners. It's impossible. People end up losing money and suffering because you decided to, move fast and break things. In fintech, moving fast and break things has much higher costs. It doesn't work. There's no magic bullet, no matter how Kool-Aid you've drunk and how Silicon Valley you think you are. You have to play by the rules, and it's going to take time and it's expensive, but you have to. I think those two things are at the core of it. And then all the great technology and automation and everything else just makes it better and creates opportunities.
Definitely. Thank you, Nare. It's been an amazing conversation. It's been a pleasure having you on the show.
Great chatting with you. Thank you.
Thank you, everyone. Ciao, and see you next week.